Should you lease or finance a car? Deciding between leasing and financing a car involves understanding how each option aligns with your financial situation, driving habits, and long-term goals. Here's a structured comparison to help you make an informed decision. 1. Overview of leasing versus financing. Leasing. You pay to use the car for a set term without owning it. At the end of the lease, you can return it, buy it, or lease another vehicle. Financing. You take out a loan to buy the car, making payments until you own it outright. 2. Monthly payments. Leasing. Lower monthly payments compared to financing because you only pay for the car's depreciation during the lease term. Financing. Higher monthly payments as you're paying for the full car value plus interest. However, payments end when the loan is fully repaid. 3. Upfront costs. Leasing often requires a smaller down payment, though you may encounter fees like acquisition and security deposits. Financing usually requires a larger down payment along with taxes and registration fees. 4. Ownership and long-term value. Leasing. You don't own the car unless you choose to buy it at the end of the lease. There's no asset value after lease payments. Financing. You build equity with every payment, eventually owning the car outright. 5. Mileage and usage limits. Leasing. Mileage restrictions, typically 10,000 to 15,000 miles annually, with costly penalties for exceeding limits. Financing. No restrictions on mileage or usage, making it ideal for long-distance or unpredictable driving needs. 6. Maintenance and repairs. Leasing. Newer cars under warranty mean minimal repair costs. However, excessive wear and tear could lead to additional charges. Financing. Maintenance costs increase as the car ages, especially after the warranty expires. 7. Flexibility and commitment. Leasing. Best for those who like driving the latest models with new features every few years. However, ending a lease early can be expensive. Financing. Better for long-term ownership without future car payments once the loan is paid off. 8. Tax benefits. Leasing. Possible tax deductions if you use the car for business purposes. Financing. Depreciation and interest costs may be deductible for business vehicles. 9. Long-term cost considerations. Leasing. Generally more expensive over many years since you never stop paying if you continuously lease. Financing. Higher costs up front but more economical if you plan to keep the car long-term. Conclusion. Lease if you want lower monthly payments. Prefer driving a new car every few years and don't plan to keep the car long-term. Finance. If you want to build equity, avoid mileage restrictions and plan to keep the car for several years. Ultimately, your decision should reflect your financial goals, lifestyle, and how long you intend to keep the vehicle.